Hello everyone, welcome and thanks for watching the Market Report. I'm your host Marcel Pechman, analyst and writer at Cointelegraph. The show debates the most pressing topics impacting the crypto market, focused on price changes and meaningful events. Today's show first article was written by Garrett. First, European Union spot Bitcoin ETF hits Euronext Amsterdam exchange. The Jacobi Bitcoin ETF is finally going live on the Euronext Amsterdam Stock Exchange, more than a year after its planned launch. Well, no disrespect for anyone, but I've worked almost 2 decades in the finance industry and never ever heard of Guernsey regulator, a self-governing island where the fund is constituted. Sure, there must be some loophole that allows its listing in the Euronext, the biggest stock market in Europe. However, that does not mean that the fund managers and the risk officers will allow anyone to buy such an asset. Listen, I'm no expert in European markets. Maybe it's pretty standard for assets that aren't effectively regulated to constitute funds in offshores and foreign islands, but it just seems kind of shady to me. At least the custodian is Fidelity Digital Assets, according to the fund's informational material. The fund seems to have launched with a mere 1 million euros in assets, which is a complete flop, also something unheard of from my personal experience. So it looks like a matter of marketing. They really wanted to be the first out there, no matter at what cost. The launch of the spot Bitcoin ETF marks a milestone for Europe, while United States regulators are yet to approve a number of similar spot Bitcoin ETF applications from major asset managers, including BlackRock and Fidelity. Okay, so definitely the US has lost the race since Canada and Brazil had their spot Bitcoin ETFs approved more than 1 year ago, and now Europe launched their version as well, regardless of the limitations of this specific issuer. So the truth is, the market did not seem to care about this Europe ETF launch, as the fund manager is not well known and the operational structure is dubious, at least. Again, I'm not saying this is a scam or anything similar, quite the opposite. It seems to have checked all the dots required for an Euronext listing. Plus, it has Fidelity as a custodian, but it lacks marketing appeal. To have your funds distributed and offered to the top global fund managers and wealth managers, there's gotta be some big names backing it. Plus, the fund should preferably not involve islands and offshores with no reputation for banking and financial security. Just to highlight, that's my own personal opinion. It does not constitute investment advice or reflect Cointelegraph's official view. Now, on to the show's next topic, we'll cover the US ETF, an article written by Turner. SEC delays set deadline for Bitcoin ETF approval to early 2024. With a maximum 240-day window available for the SEC to delay crypto ETF applications, some firms could wait until March 24 to hear decisions on filings made in July 2023. So yeah, it takes almost a year for the SEC to decide whether the ETF can be launched or not. Yeah, crazy, but that's just how the rule works. The problem is, we have been through this over and over since 2013, and the regulator literally has the power to either postpone or those deadlines or simply copy and paste their usual answer. Application denied. There's no way to prevent market manipulation as the price formation occurs outside of regulated exchanges. And they're not incorrect in their statement. It's just, should that be an impeding for launching an ETF? Yes, maybe the gold markets are not traded in US regulated venues. Maybe most of the gold is physical, but they don't care. They still have the gold ETF priced based on other sources. And those exchanges offered Coinbase as the price marking decision. You could say that Coinbase is less than 10% of the total market if you include trades in Ethereum, in Tether, in USD Coin, or whatever. but in US dollar fiat, Coinbase has a large representation, so it should be more than useful. The article goes on to say, even so, the SEC has never approved the spot Bitcoin ETF proposal from any firm in the US and only started accepting investment vehicles tied to the Bitcoin futures in October 2021. So the Bitcoin futures ETF is a complete different thing. It doesn't depend on the spot ETF, but because it doesn't depend on custodian, it has other price mechanism formations, and there's no Bitcoins effectively changing hands. The futures-based ETF is merely a financial bet between two players. The article goes on to say, part of the SEC seeming reluctance to sign off a spot crypto ETF could be from the nature of the crypto market in the US, which, while regulated, has left many lawmakers and industry leaders calling for greater clarity and oversight. The truth is, it is not regulated. Let's not try to cover the sun with our own hands here. It's not going to work. The crypto markets in the US are still unregulated. There's no clarity. Now, that could be the real reason behind the SEC's unwillingness to approve the spot Bitcoin ETF. The lack of regulatory transparency in the US makes it a tough call for the SEC since there's no specific rules to what can be defined as a cryptocurrency, let alone how exchange should act to avoid wash trading or handle other activities that influence the markets. My suggestion, don't take those dates and deadlines as the ultimate guide for catalysts and drivers, either bullish or bearish. The approval will eventually come, but SEC won't be forced to do anything while Gensler remains in command. Now, on to the show's last topic, an article written by William. Bitcoin price one hit $100,000 before the 2024 halving. Bitcoin investor and author Jess Myers believes Bitcoin will only break above 100,000 after the block subsidy halving mid-2024. The efficient market hypothesis, which states that the markets always reflect the true state of a given asset, is wrong, Myers claims. Instead, the market will price in the changed reality over the 12 to 18 months post-halving. Okay, so Jess is saying that despite the halving being well known in advance, most investors are unfamiliarized with the technology and the impacts of the halving in the supply and demand curve. Meaning, if 90% of the market don't value the halving in the current price formation, the effects are going to take a while to happen. So partially, I agree with Jess, but the truth is, we'll never know who was right. Even if Jess's hypothesis is valid and likely is, other factors can heavily influence Bitcoin's price, such as the US Federal Reserve decisions on interest rates, how are the banks in terms of liquidity, and the odds of an impending recession, elections, regulation, and so on. So there are multiple factors that impact Bitcoin price, not only the halving. So the article shows us a chart presenting Bitcoin all-time highs occurring some 220 days after the halving. But I doubt anyone expected Coinbase to be sued by the SEC or the largest derivatives exchange FTX to implode. Similarly, we could have some completely unexpected events in the next 12 months that could either anticipate or postpone the natural trend of Bitcoin's path to $100,000. So you can see that on the past two halving, the peak occurred some 240 to 200 days after the halving. So some analysts are predicting that the same path will occur this year. So that's why Jess is saying that we won't see Bitcoin at $100,000 before the halving. Listen, in my opinion, what causes the Bitcoin price to rise is the infinite amount of dollars and government debt instruments. If those were limited, the need for a digital scarce asset would be vastly reduced, but it's not the case. Having said that, I'm sure that Bitcoin will break $100,000. I just don't know when, and I'm not sure if that money will be enough to buy a house in a medium-sized city as the inflation could soar. Well, that's it for today. Don't forget to visit Markets Pro, the professional Cointelegraph alerts platform. Our proprietary indicators have been giving profitable alerts for months. There's a 20% discount link in the video's description. See you!